Hey everybody, how is everybody doing? Welcome to the session today. This is the 3D market commentary. Today is May 30, 2022. My name is Jose Blasco. You can also see my email on the screen, just in case you have questions that you would like to ask after the session is over. As a consequence of going through the commentary itself, the materials, the markets, the charts. For sure, you can connect with us. Before we get started, I would like to highlight on the upper left side of the screen our financial disclaimer. Please read it carefully. It is fairly short, so I am counting on you to read it completely. Again, this is important information, so please counting on you. And as the disclaimer completes, we are now ready to begin our market commentary, which we're going to be running every day of the week, 1 hour before the US markets open, so we can talk about key markets, so we understand the market's environments out there, and therefore we can trade better, isn't it? Very good. So let's begin. Here is the May 3032 news flash that some of our members, this could be you by the way, receive on the inbox every day. I'm going to go through the materials. I'm going to double check and reconfirm what we have on the left with the real-time charts, which I have on the right. I haven't said it as we begin, but I wanted to point at a very useful URL that you can see on your screen right now. It's tradewithufos.com/Jose. Jose being my name and Trade with UFOs being the website where you can access plenty of information, including, if I scroll down this Jose page, we get down to the questions section where there are plenty of technical questions here where you guys could search for answers. Maybe you are looking for, what do I do when I trade a call? Again, this is a very simple question. Could be anything really. You can search for answers in here. And if the answer is not there, you can certainly click on the green button and post your question so we can support you better within our website. Okay, so this page, it's indeed very useful. Okay, so I'll be referring to this page multiple times during the session. Okay, the market analysis that we're going to do, our market commentary, is called 3D because we are looking at three different dimensions, three different angles. Being the first one, what we call the market climate. This will tell us more about what's the upcoming market direction. The market may be going up. The question is it likely going to continue going up, or is it likely going to reverse? Again, what is upcoming from a market direction point of view basically has a lot to do with the climate. And as you will see, if you are new to climate, you will see how all of this in the end is statistical data processed by our technology, which basically tells us what is more likely going to happen, meaning that I'm not going to have a market analysis which is subjective based on personal preferences of what I would like to do or what I would like to see happening. I'm just going to rely on market data and computer processing power to understand better what's happening out there. Second dimension is going to be the buy and sell UFOs, probably the most important force in the markets. UFOs standing for on-field orders to buy or sell, which funnily and very, very cute, if you wish, they look like flying saucers on the chart. You can see the red UFOs, you can see the green UFOs. So those UFOs represent buy on-field orders if they're green. Red means sell on-field orders, and therefore the expectation is for when the price gets to a red UFO, then the price would tend to fall. And when the price gets to the green UFO, then the price would tend to rally. So these very large stacks of on-field orders to either buy or sell are critical to time the trades, and therefore understanding the markets, as we're going to do today, is going to be key. And finally, the third dimension is what we call the market volatility, where we're going to be talking about what is the likely speed of movement in those markets. Sometimes you have a very beautiful opportunity in front of you, but it's really not worth it taking it because the market is about to move extremely slow and it's going to take 2 years to make a decent profit. So maybe better to trade another market, right? And the opposite is true. Maybe we are dealing with markets which are extremely volatile. And again, if you're experienced, probably you appreciate that. But if you are new to trading, maybe volatility is something that you want to, get under control and not to trade assets that are too volatile at this moment in time. Okay, so again, we're going to be looking at all of that. So let's begin with our first market, okay, which is going to be the S&P 500. I have it here on the chart on the right. What we have is the S&P futures, actually, and I'm looking at the daily time frame. Of course, today is Memorial Day in the US, so the market activity on the S&P futures today is extremely limited. So again, not the best day to analyze this market, but having said that, let's do it because this is what's happening as we speak. And sometimes the days where not too many people trade are actually very good days to trade. So what do we have with the S&P? Okay, we have a climate which is currently up and confirmed. That's the meaning of the thick blue dot. By the way, AutoClimate is a free app that you could find on our website. I'll point at the website later so you know how to go there. And basically, the thick blue dot is telling you that statistics suggest that being a buyer carries a statistical advantage instead of being a seller. Okay, now, should you be a buyer forever? No, of course not. Everything got a beginning and an end. In the markets, we are talking about those statistics here, where a normal duration for an up climate in the case of the S&P on a daily time frame in the futures markets would be 8.7 candles. Currently, we are dealing with candle number 3, so we may see the market continue going higher for a week. And guess what? We may hit that red UFO by then, and then we're going to have a change of climate going from blue to red. But so far, unless something happens, and certainly we'll talk about economic reports later, this week is going to be loaded on important stuff. So, the climate could change, okay? It's just like, the fact that you are in a summer season doesn't mean it's not going to rain, or, the fact that it's winter doesn't mean it's going to snow. But statistics suggest so. So, climate, confirm and up. On-field orders to sell, 4509 to 4432. This is your sell zone. On-field orders to buy UFO, 3997, 3872. And expected volatility based on the VIX, which is basically reverse engineer. By looking at the prices of options, you reverse engineer what those prices mean from a market movement point of view. We extract what we call the implied volatility, and that will refer to 26.25%. Which is a daily move of either up or down 69 points in the S&P futures. In a weekly time frame, we'd be talking about 152 points either up or down. In a monthly time horizon, we'd be talking about 317 points either up or down. These are the current levels of volatility, which is relatively spicy out there in the market at this moment in time. Okay, so we're going to continue and move to the next market, which is crude oil. Before we do that, I said I would point a little bit about our website so you know where to go. I'd like to mention a couple of things. The name of our website is tradewithufos.com. But if you were to come to the website and either, let me maximize the screen, either click on the free sign up button that you can see on the upper right, or you were to simply type tradewithufos.com/newsflash, so then you would be able to sign up for the free membership, which, as the name says, is free. There is no need to add credit cards or anything like that. And now, next thing you know, you're going to be receiving this information in your inbox. In case you cannot attend some of our sessions, at least the information is going to be shared with you so you can benefit. Again, it's key that before we start trading, we understand what's happening out there, isn't it? So anyway, so let's go back to crude oil, okay? And now that we are going back to the charts, I meant to say, I'm changing the symbol to crude oil, super quick to get those UFOs on the screen. And now that we got those UFOs, we're going to be looking at the UFOs, we're going to be looking at the climate, and what is it that we got? Well, for crude oil, we got an up climate, which is confirmed, but caution, because of two reasons. Statistics are 7 out of 674. So the duration of this up climate is lasting more than what statistics would suggest now. It's basically reaching the limit. And on top of that, we are entering a red UFO, which, may get the price go a bit deeper for the price to then go down. Okay, so careful with those very bullish traders out there when it comes to crude oil, because again, we are reaching an extended climate condition entering a UFO. And again, all of these are statistics. Notice how there are times where market behavior will surpass. Look at how many dots we got there, certainly more than 6.74. Sometimes we have amazing moves that seem to never stop. That's out of what statistics would suggest, but that could certainly happen. Okay, so again, it's important to understand the meaning of statistics and knowing that having odds in our favor in the long run will create a benefit. So sell on field orders in this zone, buy on field orders in this zone. We are talking about 130 to 115 for the sell orders, 111 to 103 for the buy orders. And from a volatility point of view, we are looking at implied volatility on the options on crude oil futures. So that is 47.92%, which represents a daily move either up or down of 3.49 points, 7.67 points up or down in a week, 15.97 points up or down in a month, which is also not too bad from a volatility point of view. Okay, so what else can you find on our website? If you go to our website, we got a collection of courses. I'm sure some of you that are attending this market commentary may be new to trading. I'm also sure that some of you may be super experienced. But for the ones of you that need education, even beyond coaching, even before coaching, I should say, you need to learn how to trade. You need to learn the basics of risk management, all those things. So we have a collection of courses on our site that I believe you could benefit from. And by the way, the technology I'm using in this presentation, such as Auto Climate and Auto UFOs, is complementary with the access to our courses. So you can take a look, find out more about that. And if you have any questions, just email us, okay, or contact us. Next market is gold. Okay, so let's take a look at gold futures. Okay, so different chart, different market environment. So what are we dealing with here? Up climate. Okay, but careful, the up climate is not confirmed. And we know that because the dot is thin. Notice here the dot is thick. On the right, it's thin dots. In other words, this market behavior basically means nothing. There is a directional component slightly to the upside, hence the blue color, but it doesn't mean anything at all. So at this moment in time, it's very difficult. It's one of those markets that if I was to trade it at this moment in time, I would stay away because we don't have a clear statistical advantage on our side. Different story is that maybe you're on a trade and you're waiting to get to your target, things like that. So that's a different story. Everybody, you guys manage your own trades, obviously, but at the same time, this is the market behavior, the market climate that we have as we speak. Good news for the buyers of gold, though, is that the sell orders are very far away. So the sell on field orders are located at 2003, 1962, and the buy orders are closer down at 1834, 1785. So, a nice action could be to wait for gold to drop, have a little bit of a change of climate, and as gold comes back up and we have a change of climate from red to blue again, now, expose ourselves to a trade to the upside. This could be a smart approach. Just to give you an example, and this is not a trade recommendation, it's just an example, so you know how to read those tools, which is quite very intuitive, if you wish. The next market that we're going to discuss is the dollar index. Okay, before I do that, I also wanted to point at another section on our website which is critical, which is the app section. As you can see, the two apps, we have more, but the two apps I'm using in the presentation today is Auto Climate and Auto UFOs. They are, as you can see, extremely powerful to help us trade more and better. And in this sense, you can find them there on our website if you are keen to take a look. Keep in mind that those tools are combinable with other trading methodologies. So just to give you an example, you may be a Fibonacci trader trading the dollar index, and next thing you know, your price is trading into a Fibonacci retracement line, and you are planning to take the trade. Well, guess what? If that Fib line or that support resistance, that moving average, you name it, that pierce of a Bollinger Band was to happen inside of a UFO, that would add odds to your trade setup. So you could use UFOs and climate by itself, or you can use those tools combined with other methods, which are, as I said, combinable. With the dollar index, we are talking about an extended climate to the downside. So we've been going down, it's confirmed red, for 7 candles. Statistics suggest that 5.42 is the normal thing to happen. So the climate is extended to the downside, and dollar should soon turn around and go back up. Okay. Now, having said that, the green UFO is a bit lower, so we may need to find a little bit more of a drop before we get the bounce. So we'll see what's going to happen in the end. But this is where we are at. And from a volatility point of view, not too spicy like most of the times. Currencies are like that. 8% of implied volatility, that's 0.55% points in a day up or down. 1.22 points either up or down in a week. 2.53 points either up or down in a month. And the last market I'm going to comment on is the Bitcoin futures, just so we get a feel for cryptocurrencies as well. So I'm also pointing at the fact that we do live trading on our website. We call it coaching. You can take a look as well. There is a calendar on the website, so you can see when we run the trades live, so you guys can join us and practice with us and ask questions while you practice and learn and develop yourself. So again, take a look at the website for that. And back to the Bitcoin. So if I change the real-time chart to the Bitcoin, so we can see how we are in a very, very, very extended down climate. But notice how we don't have information about statistics here, because Bitcoin, believe it or not, is a very new market, and therefore running stats on it, I mean, we could, but it would be very very short-term stats, which are not that significant compared to other stats, like, for example, stats on the S&P futures. So in this case, we are simply stating the fact that we are dealing with a down climate. Sell-on field orders are not found until 35,000. So if Bitcoin rallies, we may get to 35 to 36. And if the Bitcoin drops, when we get to 23, 22, we got a green UFO there waiting for orders to get filled. And the speed of movement is expected to be at a rate of 82.75% a year, which is 1,596 points a day, 3,514 points a week, 7,315 points a month, either up or down. Okay. Last thing for me to comment on as we are about to conclude the session is the economic calendar. Also, I would like to highlight on the screen our social media pages, so you can follow us, you can like us, you can be in touch with us, you can find out more about the things that we do. It's a very short time that we're spending today, with 15 minutes to go over the markets. So if you want to find out more, you can also use our social media channels. It'd be appreciated as well that you give us a like and all those things. But in any case, before we complete the session today, I'm very quick about the economic calendar. Today, again, is a Memorial Day, right? So from that point of view, not too much activity in the market would be expected. Chinese yuan, non-manufacturing, it's coming later. These, by the way, these are New York Times. Okay, so being in Singapore, we need to add 12 hours to this, so that would be 9 a.m. tomorrow. When it comes to Europe, I would highlight on Wednesday President Lagarde's speech, especially after what happened to the dollar index, and being the euro the most liquid currency trading against the dollar. So obviously it's going to be very interesting to see what's their approach. Okay. And then, of course, Thursday, and most importantly, Friday, being the first Friday of the month, we're going to have the unemployment number in the U.S., which is, a catalyst, a driver for the U.S. markets, and therefore most markets, because many markets depend on what's happening in the U.S. in many ways. Okay. Anyway, my friends, it's been my pleasure. I believe I went, a bit beyond the session by 2 minutes, so I guess not too bad. My pleasure to join you today to conduct this first 3D market commentary. Especially big thank you to our friends with Tiger Brokers, and again, looking forward to many, many more. To be precise, every single day, 1 hour before the market opens, 1 hour before the bell, we'll be here. So join us, and see you next time. Take care, everybody. Bye bye.